This is Reza and you're listening to my market analysis for December the 28th. So, as we got the decisions not long ago that the Federal Reserve went ahead and hiked the rates, and obviously the rate hike was with a very bad timing because clearly the economy here is not strong enough, requiring the Federal Reserve to slow it down through a rate hike, and the economies around the world are not strong at all, and on the contrary, many of them are in trouble, as we are seeing at other central banks actually going ahead with monetary easing. As a result of that decision, we got a sharp drop in ES, but the drop was stopped exactly at the main long trend line. And then we bounced from that trend line for now 3 sessions in a row. Therefore, we are now back above support, but we have not yet cleared the resistance in the very short term, that is between 2055 to 2057. At the bottom range, 2033 to 2030 is support. So now we are within a trading range, and we may contain ourselves within that trading range till the end of the year, as volume will decrease and participation will be minimal, since many will not be trading the market. For anything on the upside to happen, 2055, 2057 needs to be broken. If we do break that level, then I believe that the next level on the upside is 2075. On the other hand, if we can break below 2033 to 2030, next target to the downside is 2018-75. We have to consider several things going towards the end of the year. First of all, this year was not as good as last year at all for the performance of stocks in Wall Street. Now, going forward, there will be constantly this question about what the Fed will do next. Usually they are saying when the Fed hike the rates, it's a series of hikes, and it's very seldom one random hike like many expect. If there is further rate hikes, I can assure you it will greatly damage the market. If on the other hand they get somehow a signal from the Fed that they are done with their rate hikes, at least for the time being, then market can possibly re-energize itself and go for that retest of 2075 on the upside. And also, we are going to go into the earnings season starting January. So, in short story, we should expect a lot of volatility here, because there will be those who will be buying the market going into January, fresh capital coming in, earnings season. And on the other hand, if there is any kind of suspicion that there will be more rate hike, market will be definitely in a lot of pressure moving forward. But for the time being, until we are not out of this trading range, one should sell close to the support after there is clear evidence of a rejection to the downside. When it gets towards resistance of 2055, 2057, and buy from support 2030, 2033, as there will be a evidence that that low would hold and come back up. In any event that we do exit out of this trading range, we have to monitor the nature of the break. if it's a decisive break, then obviously market will want to continue then directionally to the upside or directionally to the downside. But until these two big parameters are not broken, we cannot tell which side will break for sure. As far as CL, I mean, this thing is just plain and simple dead with zero life in it. Another day of very negative market where we came down, and then as we started to rotate down here, there was zero energy or force to push it back up. As a result, now the probability that we are going to go touch these two POCs at 36.45 and 36.20 is very much so in play. Once we do hit those two levels or between the two levels of 36.45 and 36.20, we are going to encounter significant support. If that level doesn't provide support with a good bounce off of it, then unfortunately I'm suspecting that we are going to go visit the very recent low that we have seen, roughly around 35, and if that level breaks, nobody knows the kind of reaction we will get, because that will be the break of a very fresh recent new low we have in place. Gold was the same as crude today, very little trading interest towards it. However, there was no demand nor energy for work to the upside. We closed towards the bottom end of the range, which is not too good. Therefore, if we are going to continue for a break to the downside, 1054 is the next target on the downside where the POC is. If we do manage to come and break today high, reject back above 1072, then we are going to go tackle 1077, which is a top part of a trading range resistance, and if that level is broken, then we are going to go tackle 1081 level, which was this high. So very rough year for commodities in general, very rough year for gold, very rough year for crude. And will the trend change this coming year or not? That we do not know, but it has been a very challenging year for these two instruments. The way it's shaped right now doesn't look too good, but it is so oversold that definitely an oversold bounce off of these levels, it's not something impossible to achieve. So be careful going towards the end of the year. Volume should be thin, volatility should increase, there will be a lot of portfolio adjustments, money coming in, money going out. Best is that if you see that the market is not responding to your analysis and you are not finding success, or if you find that the trading ranges are too tight and not much going on, exercise discipline to stay away. Otherwise, it is very notorious to lose a lot of money even on a very tight little range where price goes nowhere, and chop and churn randomly up and down, played by a few computer programs out there. Thank you for listening. This is Reza with Profiletraders. If you wish to get my courses and join my trading room with a fresh start next year, you can get it from my website www.profiletraders.com. Have a great evening.